What we're going to do is make this a fast 30-minute panel in the interest of capturing some time back. And the basic session we're going to have is a status update on what is working or not working with some of these regulations from a more technical point of view, plumbing, process-wise. And I always call Sara when I have questions, so I appreciate.
Everyone always calls Sara.
Everyone calls Sara.
I call Sara.
Yeah, sometimes people even pay me. It's amazing.
It's amazing.
Not often.
It works sometimes as an attorney, right? So 30-second quick introductions. Not everyone knows who you are. Andrew, you were just up, but just for the sake of the audience online.
My name is Andrew Dix. I am the founder and CEO of Accredited Media Group. We're the publishers of Crowdfunding Insider. It's one of the leading digital publications that covers fintech, alternative finance, and crowdfunding.
Yep.
Scott Purcell, CEO, founder of Fund America, provide a lot of technology and compliance for people engaged in the business of crowdfunding. Also CEO and Chief Trust Officer of Prime Trust, a new trust company that was just received its charter from the Banking Commission.
Sara Hanks, I'm CEO of CrowdCheck. We do due diligence and compliance and pretty much all services you need to do any Jobs Act offerings. And also managing partner of legal, that's interesting, and also managing partner of KHLK, which has gotten 16 Reg A filings qualified by the SEC.
Peter Duggan, I am Senior Vice President at ComputerShare. We perform the record keeping of the shareholders after a private company does its raise. You have a lot of shareholders that then need to be maintained, so we do the plumbing behind the scenes to make sure that you communicate with the investors and that all of the proper paperwork is taken care of in paying dividends, tax reporting, everything else supporting the investors after the raise.
Thank you. And Richard Swart, Chief Strategy Officer of Next Gen Crowdfunding. We don't actually do crowdfunding, we're just part of the ecosystem trying to help raise awareness and provide education. So luckily I don't have to get involved in the nitty-gritty transactional details, which is what we're really here to talk about today. So Scott, as a technology provider, could you give us maybe your top 2 things that keep you up at night about Reg A and how it's been rolled out and what needs to happen to make that market more efficient?
Well, we, like all of us on the panel, we are beholden to our customers' success. And so what keeps me up at night is our customers are crowdfunding portals, broker-dealers, and things like that they are successful. And so you give a nod and shout out to Darren and other marketers. What keeps me up at night are people that are not putting the right deal structure in place so that they have a chance to get financed and doing the right marketing so that they can actually get the investors. From a technology perspective, this is all incredibly complex, but I think everybody already has well learned that you can't do this without technology. It's just not possible. And we've seen a lot of people fail trying to do it manually. We've seen people try to get into the escrow business and fail or are failing at it. And it's just really, really painful.
So Peter, you're involved in some of those solutions. Could you explain for the audience who may not know some of the complexities, what are some of these areas that are just still being built or that people are not addressing?
Sure. So I said before that we record keep the shareholders after the raise. Now, in the case of a Reg A transaction, a Reg A plus, there is a requirement that a registered transfer agent be hired, and that is what we do, and we're registered with the SEC. There are rules and processes around it. But for a Reg CF or 506C or any other type of private offering, the company can keep its own records if it wishes, or it can use some software to do it. But what we find many times companies don't realize that in doing that, it's more than just keeping the name and address in a spreadsheet. There are legal issues associated with when someone dies, making sure that you transfer the ownership and you have the correct paperwork to know who to transfer to in the case of death or divorce, understanding when an account is abandoned. Each state has rules around turning over abandoned property to the state. And if you're not following that, you're out of compliance. We don't think that issuers, after they've done the raise and are doing their own record keeping, that they don't understand that it's more than just keeping the name and address on file, the number of shares on file. So that's one of the things that we hope to continue to educate the market on, ensuring that you either have a professional that knows all of the rules and regulations around shareholder record keeping, or that you get very educated yourself if you're going to do the record keeping.
And I happen to know, Sara, because I track literally every Reg A transaction, and your name appears more frequently than any other attorney in the country. So could you talk us about some of the largest misunderstandings that your clients have that we can maybe clear up today?
On the Reg A?
On the Reg A first.
Yeah,
We'll
okay.
take
So
Reg A first.
Reg A first. Right this week, the biggest issue that we are having is the conversation that goes, okay, so if we don't file the annual filing by the end of next week, what can Sebastian and his guys do? We go, you do not want to know the answer to that question. We do not ever want to have to answer that, because there have been, in fact, cease and desists in this area, which is a, by the way, bad act, which gets you into trouble and you can't do stuff in the future. So right now with Reg A, when you look at who has made their annual filings, the Fundrise Group has done all of theirs. And then I've got a whole bunch of companies who are like, yeah, any minute, that the auditors are just signing off. So I am literally losing sleep over that, because I'm very worried about not everybody getting in on time. It is no small thing to file with the SEC. And we can get to that in the Reg CF area as well. But that's the biggest thing that I see with Reg A right now is, hey guys, this is serious. You know, you sold securities to strangers over the internet, and now you have an obligation to give them information and to update stuff with the SEC. So, you know, get it done.
Are the platforms, or sorry, are the issuers doing investor relations? Are they providing, you know?
It's kind of all over the place. I mean, you know, you've got some guys like Legion M who's like constantly giving information because that's how they thrive. And then there are some other companies who haven't really realized that they're semi-public companies now, because that's what they are. I mean, they're almost public.
So, Andrew, you're pretty much the nucleus of the industry. What would you say the sentiment is most broadly? Is Reg A working as it was intended?
Well, you know, first of all, what do you benchmark it against? I think that's kind of a hard metric to really figure out. I do believe that it's still very much an evolving and emerging sector of finance. There's a lot of people that are trying to figure it out, and that takes time. I mean, it took a long time for the SEC to put things together. Now it's taking time for support people, legal people, CPAs, and other back-end people to figure out how it works. I also think that there's an emerging group of people that are very qualified to help flow through the process, like Sara, like Brian, like Amy, but there's still a lot of people out there that don't understand it. I've heard of potential issuers that have gone to the guy they went to college with, or somebody who knows somebody who's friend, and they've paid for people to learn the process. And that's slowed things down. I think that you have this emerging group of professionals that are helping to build this ecosystem for Reg A+. And again, that's going to take some time, but I think slowly it's gaining traction.
So your argument is it's a learning curve. I've also heard, on the contrary, there's some very significant plumbing issues. And there's some challenges with the brokerages, with the clearing, that just actually placing some of these securities is still a challenge even once they're issued. You're nodding your head, Peter.
Yeah, I mean, we're fortunate in that, so we first got involved with Reg A actually as the transfer agent for Fundrise in their initial e-REIT, and then we've done all the other ones for them since then. So almost to the point Scott said, if you're working with good companies that have figured out ways to create some liquidity, that have selected good advisors, then the transaction has less plumbing issues. But there are a lot of inexperienced people, as Andrew was mentioning, who may be giving advice, and unfortunately then the transactions do get set up in a way that is fraught with a lot of plumbing related issues. So we see it. We've been fortunate enough to work with a number of companies that did things right.
Okay. So what's on the horizon for you, Scott? What's other from your technology or just continuing to evolve? You know, how is the technology getting better to make this more seamless?
Well, there's a tremendous amount of technology that is written both for escrow operations and for AML, BSA compliance, transfer agent. We also own a transfer agent, and a variety of other things. Some of it is just making it easier for our customers. This broker-dealer has these specialized kinds of technology requirements. Can we adapt those and make them available generally? Famously, we've had hand-bricked ask for a lot of custom things that they wound up, some of them not using, but now are being used by portals all over the country. So we've spent the time to do it. We've got regulatory issues. Like now we have credit cards that are coming out, and the credit card company wants the portal or the broker-dealer to be the merchant. It's not really clear from the SEC if the broker-dealer or the merchant portal is allowed to be a funds processor, and if they are, how that affects net capital requirements because of the 180-day of risk period and all this other stuff. So, and we're writing technology to that because now those come into escrow as a batch deposit. How does that break out to account for each investor? There's a lot of tricky technology that's not going to slow down, just like the portals have a lot of technology for their marketing and investor relations.
Okay. Well, in the interest of time, let's move off of Reg A for a second. So let's talk about Reg CF. There is a very strong camp that says it's a flop, that it's not succeeding, it's too slow. There's been 250 people attempting to use it in 10 months. Others in the industry are saying it's off to a slow start, but it's actually working as intended, and it's going to take time. So real quick poll, what is your sense of Reg CF? Working, not working as intended? Peter?
First. Our issue with Reg CF, one, there haven't been as many deals as we had all hoped for. This is a scale business, especially if you're doing processing and plumbing. You need a lot of transactions to make it profitable. But when you're only raising $1 million, there's only so much that those of us who provide the plumbing can charge. So we see that prices are artificially low to help get these initial transactions off the ground, but that at some point it's not sustainable. So either the $1 million needs to rise higher so that the cost of getting it up and running can actually move to a point where it's sustainable in the market, or it's just going to get really hard. Providers are going to raise some fees. It's going to be at a point where the $1 million doesn't go very far for the client if they've got to pay out their lawyers, their transfer agent, the portal, the technology provider behind the portal. That right now it just doesn't seem to be that the economics in the market are working effectively.
All right, so your position is it's actually quite expensive to do a Reg CF. Sarah, I've heard you take the opposite view, that you can get away with this relatively inexpensively?
Yeah, I mean, it's a point that we've been making from the beginning when people were bringing up these, like, oh my God, it's going to cost $40,000. And we're going, our highest product is $5,000, and that includes fact checking, and you don't have to do it. Our lowest cost product is $500. We'll read through the form, make sure it complies. It's not that expensive. And unlike, there's a lot of other people saying, well, the prices will go up. No, that works for us. We're making money on it. So I tend to discount that part of the, oh my God, it's too expensive. There are other things that you've got to take into account, like transfer agents. But as far as the overall success goes, you look at the number of filings, and I counted it up yesterday, 280 roughly. There's been a few misfilings. Final Form CUs, roughly 50-51. There are a few misfilings there too, so you can't get an exact count. Although because the SEC, thank goodness, and thanks Sebastian, permits rolling closings, there have been some drawdowns that have not yet been reflected by CUs. But you look at that, so that's a 20% success rate. So to me, that's saying that there isn't a limitless pot of money at the end of the rainbow that everybody should be trying to access. So where do we go from here? We explain to investors that this is a thing. Most people don't realize it's a thing yet. So a lot of outreach. And then the other thing I just want to throw out there, because I keep making this point on success, a lot of the friction is not the securities law, it is corporate law. You've got companies out there selling securities that do not exist. This is a really bad idea. They're selling securities that they haven't authorized. The corporate niceties, which cannot be touched by the securities laws, have got to be complied with. If you're selling preferred shares, you have to create them and file with Delaware and then have a board approval. Nothing that the securities law can do can touch that.
Well, I'm glad you're making money. We lose money on it. It's a lost service for us. But
Go ahead, please.
To the success point, we see, obviously because we do escrows, we see a lot of these deals. We see a lot of successful companies. And successful, maybe they didn't raise $1 million, but their minimum was $100,000. And so they've got their seed money that they wouldn't have had otherwise. They've got some investors as brand evangelists. So they're achieving success with Reg CF even if the dollar volumes aren't there. And we've seen a number of investor or issuers raise over $1 million, and we've seen some now use that to start leveraging into their Reg A. And Sarah's been a part of a lot of these as well. Is it working? Yeah, it's just not as fast. Like you said, you thought there'd be thousands by now, and there are really dozens. We had, I don't know, maybe 40 Reg CF escrows open last month through our systems. It would have been nice if that was 400.
So Andrew, why do you think it is 40?
So first of all, let's go back to the benchmarking question, because when I look and try to decipher whether Reg CF is being successful or not, what am I comparing it to? If I look towards Canada, that enacted a low dollar exemption, it was a total utter failure because nobody used it.
Right.
They had a big zero. So obviously the regulatory policymakers need to go back to the drawing board and figure that out. But when I look at the UK, which is a much smaller market, I think that their light touch regulatory approach, void of any fraud, sure there have been plenty of failures, has helped to foster a far more robust early stage, middle stage market. And I think that when we look at Reg CF, we have to look at the different constituent parts that we need to create an ecosystem that's functioning. So you have the issuers. Is this the right exemption for them? Does it work for them? Are there too many moving parts? Then we have the investors. Are these quality offers? Are these actually deals that you or I would want to invest in? And then the platforms. I mean, does this make sense for a platform to be a pure Reg CF issuer right now? Probably not, because that's a way to scale to zero, and nobody wants to scale to zero. So the platforms are being compelled and pushed to say, well, what other types of services can we do or create? Are we full stack, Reg D, Reg A, Reg CF, or maybe we provide other services? So that creates these challenges. And I think for policymakers, they need to step back and say, well, is it working or not? That's not the right question. It's like, what do we need to do to improve it? Right. So you look at those three constituent parts and say, we need to look to improve it for each of these parts to make it a more robust, viable exemption that's good for everybody. It should be that first step in the capital ladder that is of choice for both smaller and more promising firms. I mean, it should be something for everybody, and that's my personal opinion. So are we there yet? No. Can we get there? Yes, but I think that we need to do some tweaking for the rules.
So let me go back to something you said. Thank you, Andrew. Using Reg CF to get the funds to do a Reg A raise probably wasn't what the SEC and Congress had in mind as they crafted these regulations.
No.
So I'm not an attorney. I'm not going to opine legally. I think the fact that they're getting through means it's legal, but is it appropriate for this community to be reaching out to investors and saying, please invest in this so that we can go solicit other investors with your money?
So you're asking me,
Opinion, yeah.
Yeah, that may not be something that I would personally be interested in. I'm not here to give investment advice. That's for each individual person to decide whether they want to finance something like that. And it's hard to create, some sort of sweeping judgment across the board because every issuer's, situation is different. Could there be a situation where I would consider that? Sure. In general, probably not. I want to see a quality security that I think that company has a chance to be successful, and then I have a chance of making a gain at some point in time. Early stage, it's risky. I mean, basically, a lot of these companies are going to fail. A few are going to stumble along. There'll be a few big gains, but you want to create a system that that allows that to happen, to evolve. We're a capitalist market society. There's risk involved. You can't eliminate that. That's just the sheer utter reality of how things work.
Yeah, usually when you do a bridge, it's to bridge between financing rounds. It's not to bridge to your first financing round.
Right, yeah, exactly. So what about the issue of investor verification? I talk to other angels and I talk to investment groups. There's sort of this meme, maybe based in reality, maybe just it's a meme, that the fact that there's constant re-verification under general solicitation is causing some investors to walk away or get very frustrated by the process. Have you actually seen evidence of that?
Yeah.
Scott, you're nodding yes.
Well, we do a lot of it. We integrate with Verify Investor, and so the 506C offerings that come through our systems automatically queue up there. And there's been a lot of misunderstandings, a lot of confusion. People think that you have to get reconfirmed every time you make an investment, which of course isn't the case. Your tax returns haven't changed in the last 30 days or the last 90 days or the last 120 days. So a lot of this is subject to different legal interpretation. But although we have seen some investor friction in having to do it again or having to do it because they're investing in their family's name or they're investing through a corporate trust
Right.
or something like that, and so they have to go through all this paperwork again. By and large, most people just kind of roll their eyes and go along with it. And so it's very rare that we have a fail because, or we see a fail because somebody just refuses to do it. It does happen.
Right.
It does. Somebody's like, my name is named partner of a giant hedge fund. We had this happen. It's like, I'm a multi-billionaire, go
Google
bugger
me.
off.
Yeah.
I'm not doing this. But by and large, most people are doing it. And what's interesting, I think, the ones that have truly failed, the rules have prevailed because that person should have been prevented from investing.
So interested to know we're going to move fast here. Magic wand, if you could change anything about the regulations, knowing that Sebastian's up next, so we're setting you up here, Sebastian. What would you ask the SEC to consider doing, or should we call Congressman McHenry and say, in whatever version of whatever act is going to happen, this really needs to be addressed? I'll start with you,
Start
Peter.
with me. I would say it's a little bit self-serving, but in the same way that the SEC requires public companies to have a registered transfer agent, we believe that that same due diligence that a registered transfer agent provides and the security and safety that come along with doing things the way they should be done would be helpful for the industry to be required for Reg CF in particular, maybe some of the other private offerings. Because sometimes the issuer is deciding if they're going to keep the records themselves, and they think of the cost and say the cost is my time to keep these shareholder records. We say the cost is actually the risk of doing it wrong. The liability associated with not properly escheating to the states, the other liabilities that come from transferring incorrectly a restricted security and removing a legend on a restricted security, those things have greater risk to the company than will I have my assistant keep the shareholder records on a spreadsheet. So we think that that same reason that the SEC did it for public companies, required them to have registered transfer agents, we think it would be great for the industry that that also be required in private offerings as well.
And I'm going to skip you, Sarah, and come back to you at the end here. Scott?
A couple things. I think the rules for 506C have been pretty workable. For Reg A, by and large, it's working. There's some lack of clarity. In Reg CF, obviously the cap should be higher. It shouldn't be $1 million. It should be more. We've got to have some relief so that accredited investors can invest in Reg CF. I mean, if you've got a large corporation wants to allocate $50 million instead of their corporate giving, they're going to do it as entrepreneurial, help a man fish rather than teach him to fish.
Right.
Well, the rules say that company can only invest $100,000 maximum across all deals in a year. So accredited investors are prevented from investing, by and large, in Reg CF deals, which is crazy because it would help non-accredited investors if accredited investors could play in Reg CF, but they can't. So, there are, those are really the main structural sticking points. And the last thing I'll pick on is that with issuers required to file a Form C every time they sneeze, I think you're setting the SEC up for just a flood of Form C amendments and annual Cs and all these Cs, and you're setting up the issuers for failure because we've already had, we've seen 2 of our Reg A issuers mess up on getting their annual filings done. Those are more sophisticated, generally have better legal counsel. The Reg CF people, they're going to miss their form filings, and the SEC is going to have to put all their efforts into enforcement of that. It's going to be a mess.
So I agree with everything you just said, especially Reg CF. Congressman McHenry created the Fixed Crowdfunding Act last year, in its original iteration, that really fixed just about everything. Unfortunately, when it went through the committee...
Could you catch people up on what you're referring to, because many people may not know the difference?
So Congressman McHenry, who's one of the creators of the Jobs Act, he recognized there were some shortcomings in Title III of the Jobs Act, Reg CF, and he created a bill to address those shortcomings, which was the cap. I think he's raising it to $5 or $10 million. SPVs, special purpose vehicles, the accredited investor shortcomings. There were testing the waters. There was a litany of items that were really common sense items that Congress should just move quickly on, and of course it stalled and died probably because of parochial politics or misunderstandings. Who knows? It doesn't make any sense. There's hope that that will resurface once again. Still kind of an unknown in this Congress. There's a lot of unknowns in this Congress. So I think I agree with Reg A Plus. I think the one thing that I keep harping over is the accredited investor definition. I think if we had a sophistication qualification, that would address a lot of things, because as Brandon from Fundrise said earlier today, we have a lot of really rich people that are clueless. We have a lot of people that don't qualify as accredited that are super sophisticated. I remember the former SEC Commissioner Daniel Gallagher, during almost his entire term at the SEC, he was not considered an accredited investor. That is nonsensical. It doesn't make sense. Here you have the guy making the rules. He's not allowed to invest in Reg D offerings. Okay, to me, that's silly. I would like to see a sophistication qualification where people who have the capacity and ability, the knowledge, the wherewithal to invest in these exempt offerings, they should be given a path to do that. I think that's something the SEC should just move forward with.
And I agree
So
with
go
you.
get them, Sebastian.
So interestingly, I saw the original letter that came out of ICE's office, going back into how this thing all happened. And the specific language used is this bill is intended to aid sophisticated but not yet accredited investors. So I think the idea of sophistication somehow got lost in the process.
Yeah.
Now, Sarah, I know you know what's happening a couple miles away from here. Can you, to the extent anybody does, can you give us a quick update on some of the legislation?
Oh, well, the one that really intrigues me that came out yesterday, we're talking about the Choice Act.
Yes.
Right.
And I don't know if anybody's read Subtitle P, but the way I read it, it would eliminate almost the entirety of the 33 Act and a big chunk of the 34 Act. And I'm not sure if that's intentional or not, because I never predict anything about what those guys are doing. But I found that intriguing. If it's intentional, it's huge. And you don't need the rest of the Choice Act because most of it goes away. So I'm choosing to believe that different people did different drafting, and maybe someone did not read that. Anyway, so I can't see that going ahead in its current form. But there's always some kind of legislation over there. The piece of regulatory fix that I would most like is some kind of clarity on communications rules, which would not just pick up the ability to do TTW, but also communicate while there's an offering going on. And I know that the staff of the SEC was constrained by the fact that there is a ban on publicity in the statute. And if you could get rid of like 8 words out of the statute, that would fix it. I still love the way that the regs and the statute, Title III of the Jobs Act, sends everyone to the platform. All of the information is there. But I feel there's no harm in saying more about an offering, whether it's prior to filing or whether it's once you've filed, providing everything is now collected up and on the platform so the investors can see it. So fixing the communications rules, totally agree about the accredited investor stuff. I do not agree with raising the limit. And I don't think anyone who does what I do would, because you have absolutely no idea the chaos in which small companies operate. And I know it's a sort of artificial limit, but with $1 million, you can limit the chaos. Pretty much every company who comes through us has a problem somewhere, either in the disclosure or in their corporate structure or wherever. You could not imagine the variations of chaos that small companies can get themselves into. I mean, we've had several who've tried to issue securities that don't exist. We've had a company that...
Isn't that illegal?
It is
Yeah,
illegal.
it's a little detail.
It is illegal, but if somebody would, but nobody's keeping an eye on that, and there's no process unless you go through us that
It's called fraud, right?
it would be fraud if they actually managed to sell.
Yeah.
But then you have companies who are trying to create a class of securities in which, all of their voting securities had no votes. I mean, literally, they managed to create classes of securities where there were economic rights, but nobody could vote. How they did it, I don't know. They pulled crap off the internet and just marked it up. But it is amazing how much trouble small companies can get themselves into. not through any intention. It's just because they don't know what they don't know. So for that reason, it's at least until we've got some way of monitoring that companies are actually selling stuff that exists, which is not being done across the industry. I'm not in favor of increasing that limit yet. Eventually, maybe.
Okay, we're almost out of time, so let's take 2 questions and only 2 questions, one from this side. And I see Amy's going to kill me if I don't ask her. So Amy, you're up.
I actually have a question for Sara. Under Regulation A, you cannot take a minority interest in a number of companies because of the Investment Company Act. That's correct. Why is that, number one? And number two, because it seems like a company with for example, Legion M would benefit by being able to invest a little bit in a number of movies, but yet they can't do that. Can you comment on that?
Well, I mean, it's part of the structure of Regulation A. Investment companies have to go through the Investment Company Act process, the 40 Act process. If you are a company who does nothing but, or the majority, at least 40% of your assets are in minority holdings in other companies, that's just the definition. And if you wanted to change that, you'd have to start with the 40 Act. As opposed to anything else. Now, whether the staff from a policy point of view would think that would be a good idea, but I think that would have to be a legislative rather than a regulatory change.
Yeah, and remember, the real pain between the 40
Gene,
Act
Gene,
and others is
that way.
state blue sky issues, and that's why people would like to do this with Reg A.
Yeah.
Amy?
Good morning. I have a question. So I run a platform that's intrastate in Oregon. So a whole 4 million people are our market. And one of the things I think, I'm completely giggling here because the same things are happening at the intrastate level that you guys are talking about, exactly the same things. But I'd like to ask what you think about education. You mentioned platforms, and entrepreneurs and the issuers, but no one's talking about the investors. And of all the things that happen as we work with, the 35 states now and counting, the investor education and investor awareness is the biggest gap. So as we build the ecosystem for the entrepreneurs and those who are serving the issuers, we have a whole black hole for those serving the investors. And I think we will get there. People are getting more, eventually will become more sophisticated as these things get integrated into university programs, and small business service providers are actually helping tell them that you actually have to create the shares first before you sell them. I think we'll get there. Like that does seem to be happening. But what's your take on who should be helping the investors learn more about what this all means and differentiate between all the different kinds of regulations and offerings that are out there and are only going to get worse or better, as the case may be? Thoughts on investor education?
I would first off say industry groups like this should probably take, and those that are on the board of CFPA could think about what is the role of CFPA in educating. I know you do a lot in the education space, but it really should be industry groups versus individual providers in the market is my take.
I think industry groups could do it all day long, and it's not going to reach most people. What reaches people are you guys. And everyone up here, all of our customers, well, a little different for Richard, but all of our customers are typically the portals, the platforms, the brokers, sometimes the issuers, but rarely or never actually the investors, because you guys are the tip of the spear, not us. And so that education is going to have to be driven through people like yourselves.
Yeah, I agree. I think it's multifaceted. I think it's coming from entities like the CFPA, people up here on the panel, people out there, everybody, the platforms, some of them do a really good job of doing it, but it's going to take some time. I mean, I want to click my fingers and click my heels and voila, it's done. But that's not reality. It's going to take some time. I am optimistic and confident that over the coming months and years, as we get some more successes in these early stage companies, that people will become more interested in it, and I think that's going to help drive it.
Yeah. Let me address it really fast, and we're going to wrap up and invite Sebastian to come up. So, being an educator, I think the trade associations have a role to play, and in fact, we have this coming merger between CFPA and CIFRA, and they both have education committees, and in fact, Kevin Purcell is going to be talking later about some of the things that we've been doing, and we'll make some announcements later today about some educational initiatives coming. So, but Scott, frankly, yeah, we have a limited audience. And I think that's going to be a challenge. Frankly, I would like Pam Gibbs at the SEC, who has the money under Title VII, to do investor education outreach, to start doing more of that. And I'd like to see FINRA throw a little bit of money behind that, and I'd like to see some broader coalitions, whether it's a National Hispanic Chamber, National Asian Chamber. I don't think that we're a really small industry, folks, you know. Sarah and I joked there's 40 of us, so we should just have lunch once a month and just compare notes. We're small, and we don't have the reach to the 250 million potential investors out there, so there needs to be other channels, you know, whether it's media, whether it's somebody gets on the phone with Oprah and have Oprah talk about it. I mean, literally something like that. Athletes, celebrities, there has to be some channel to get the information out there, and I don't think it's going to come from us, although we'll do our best. And with that, thank you. We're going to try to get the day moving along, and we'll invite Sebastian to come up. Don't get up.